So in this example, accumulated depreciation is the contra account to depreciation expense. And so we already said we were going to do $30 a month. So we debit depreciation expense, office furniture, and we credit accumulated depreciation, office furniture. Those are opposites, which means they cancel each other out. Now, when we're looking at depreciation, we determine book value. The difference between the cost of an asset and its accumulated depreciation is the book value, and that's shown on the balance sheet. For example, with office equipment and office furniture, you see our office equipment was $3,000 less our accumulated depreciation of $50 gave us a book value of $2,950. The $2,000 and the $3,000 for the office equipment and the office furniture was the original cost of that equipment. And you notice on the office furniture we're less accumulated depreciation of $30, which gives us a book value of $1,970. And you see what we were talking about, that contra accounts have the opposite normal balance of what the account that they're related to has. Assets have a normal debit balance, and so a contra account for an asset would have a normal credit balance. Now, the last category that we haven't discussed yet was unpaid wages. So, the last day of the accounting period and the last day of a pay period usually don't coincide. So, when the accounting period ends, there's usually wages employees have earned but not paid, because the next regular payday is not until sometime in the next accounting period. So you might get paid through Friday, December 31st, but you won't actually receive your check for that work until January 7th. That's an example of that. So, unpaid wages are an expense of the period in which the wages were incurred. So, unpaid wages for that December example would be that they would fall in the December month instead of January. Now, unpaid wages are a liability of the employer. So, if we have 3 employees earning $150 per day, and they're paid every Friday for a 5-day week ending on Friday, and December 31st falls on a Wednesday. So we have to make an adjusting entry on Wednesday, December 31st for salaries owed to the employees for Monday, Tuesday, and Wednesday. So we had 3 employees at $150 a day times 3 days, and that comes up to $1,350. So our adjusting entry for that would be a debit to salaries expense and a credit to salaries payable.